A lot of beginners out there don't even know how to read the market structure correctly, and I've got a lot of messages from my fans telling me that, hey, Light, please can you make a video concerning market structure for us? And in this video I'm gonna be teaching you guys how to read the market structure correctly. It doesn't matter whether you're trading the SMC strategy or you're trading the retail strategy or you're using ICT. No matter the strategy you are using, first thing first, you have to know how to read the market structure correctly. And guys, with that being said, let's dive into this video. I'm Light Forex. Make sure you subscribe to my YouTube channel, because the reason why I created this channel in the first place, is to pass knowledge to people in need of knowledge. And with that being said, let's go. Alright guys, welcome back. When it comes to market structure, as it sounds, market structure. So market structure, it helps to know the direction of the market, whether the market is going up or the market is going down. And when I mean market is going up, I mean bullish, and when the market is going down, I mean bearish. And there are three types of market structure. We have the bullish trend, we have the downtrend, and we have the consolidation trend. What the consolidation trend means is that when market is literally ranging. So that is it guys. And I'm also going to be talking about BOS, change of character. I'm gonna literally break it down to you guys. Please make sure you hit the like button as well, and forward this message, forward this video, to people who are in need of knowledge like you guys. So with that being said, let me show you a real example of market structure on my chart and how to mark them correctly. Welcome back. As I said earlier, we have three types of trend, and we have uptrend, downtrend, and ranging or consolidation trend. But for us to be profitable, we literally have to focus on these two, and that's going to be uptrend or downtrend. What I mean by uptrend is when market is going to the upside, and what I mean by downtrend is when market is going to the downside. But in consolidation, that is when market is ranging, but we don't have to focus on that. Don't trend when the market is consolidating. We just have to focus on only the downtrend or the uptrend. So how can you identify uptrend and how can you identify downtrend? So let's start with uptrend. In an uptrend, we literally want the market to keep creating series of higher highs. Let me write. So in an uptrend, we need series of higher highs. That is, market keep breaking highs as much as possible as it can. While in a downtrend, we want the market to keep breaking lows. In a downtrend, we need series of lower lows. So let's start with uptrend first. Let's start with uptrend. How can you identify an uptrend in the market? So here is it. So this is example of an uptrend, and for this trend to be valid and to be called an uptrend, we have to see minimum of 2 higher lows and 2 higher high. Minimum of 2 higher lows and 2 higher high. So guys, this is a high, this is a high. Let's represent I as H. This is a low. Let's represent low as L. So but immediately this market break above this previous high, that will give us higher high. It's as simple as that guys. This is immediately the market break above the previous high, which is this one. It literally changes to higher high, and after a higher high, what do you need? You have to wait for a little pullback before having the next push. So and that little pullback is what we call higher low, HL, higher low. So and this is the first low, this is the second low, this is the first high, and this is the second, this is the first high, sorry, and this is the second one. So this trend is valid as an uptrend. So as I said earlier, in an uptrend we have the market to keep breaking highs as much as possible, and if you can look at this clearly, you can see this is high, this is high, this is high. That shows an example of an uptrend because it literally keeps breaking high. But in a scenario whereby the market breaks below this, what is that called? That is a downtrend. Downtrend has literally begin. So because assuming this market did not break below here, that is going to be higher low, but because it breaks below this instead of this to be the higher high, it's literally going to change, change to lower high, because it has literally changed to a downtrend. So let me draw that separate for you. But what this is literally called is when an uptrend later turns to a downtrend. That's what we mean by change of character. And immediately markets keep breaking above previous structure. That is what we mean by BOS. So let's identify downtrend in a separate way as well. So in a downtrend, we have the market to keep creating lows as much as possible it can. So let's label this together. This place is going to be a low. After that, we have the market to retrace a little bit. We can't say that's going to be a lower or a lower low, but first we have to identify lows and high before moving to higher highs, before moving to lower high or lower low in a downtrend. So let's name this as H as well, and H is high. After that, you can see clearly that the market breaks above the previous low. That is why it's going to be written as lower low, LL, lower low, because this low is lower than the previous low. This is going to be the lower low. After that, the market needs to retrace a little bit before having the next push, and that is going to be lower high. As easy as that, lower high. And after this again, the market breaks below this structure again. That's going to be another lower low. You keep identifying lower lows as much as the market keeps breaking structure. As long as the market keeps breaking structure, the trend is still continuing. The downtrend is still literally going to be continuing. But immediately the market, when in a scenario whereby the market, instead of it creating a lower low in the downtrend, it break above the previous lower high. That means the market has changed from being bearish to being bullish. It's as easy as that. In an uptrend, you need higher highs. Keep seeing highs. As long as the market keep creating highs, uptrend is valid. And as long as market keeps creating lows in the market, lower lows by that, so downtrend is valid. It's as simple as that, guys. Okay. Alright guys, let's look at some few examples in the real chart. It's not going to be clean as it is when drawing, so market is literally different from that, but I'm literally going to guide you on how to figure it out on your own. So this is example of an uptrend. You can see the market is going up, and this is example of a downtrend as well when market is going down. So for us to understand better, let's use this part to mark it very well. You can see from this point the market give us high. Let's call this high, because we don't know if it's going to be an uptrend or a downtrend. So after that, this is a low. After that, this is example of higher high, because this high is literally higher than this previous high, so that's going to be higher high. After that, I told you we have to have some little retracement before having the next push, and the retracement is this, guys. So this is going to be called higher low, and after the next push, this is going to be called higher high because it breaks above this. So that is uptrend. And immediately in a scenario whereby the market keeps breaking highs, that is an uptrend. So but come to think of it, after this higher low, the market failed to break above this previous high. You can see it failed to break above this previous high, so let's count as that double top, but you don't need it for now. So after that, let's say the market failed to break above this previous high. You can see it breaks below. You can see it breaks below to being bearish. So that's a change of character for you guys, because the market is being bullish before, but right now has changed to bearish. And after, in a bearish scenario, you have the market to keep creating lower lows. And here is it, guys. After this low, the market retraces a little bit, give us another lower high, or this is low, this this is a low, sorry, this is a low, this is a high, so this is gonna be the lower high, and after this, immediately the market break below this low, that's gonna be lower low. That is lower downtrend is confirmed, and after that lower high, and after that we have another lower low. So it's as simple as this, guys. Let's bring this out, let's identify it together. Let's identify it together. You can see something like this: higher highs, higher low, higher high, higher low, higher low, equal high, lower low. That's a change of character. The market break below this, below this structure and give us lower high, lower low. Downtrend is confirmed, guys. So in an uptrend, we literally have to keep seeing highs, while in a downtrend we literally have to keep seeing lows, as the case may be. While in the energy market, you literally have to avoid this because it's not going to give you a clear direction. Alright guys, I believe by now you've been able to identify market structure correctly. You'll be able to know the kind of the type of market structure we have, and difference between the POS and change of character as well. And guys, please, if you find this video so helpful to you, make sure you don't hesitate to hit the like button, share this video to your loved ones and people who are in need of knowledge as well, and make sure you stick around to the next one.